Hello viewers, welcome to the Dime Investor channel again. Today I bring another new idea, new company in a different new trend. It is on telemedicine sector. I think that industry is growing huge now after the pandemic because everything was closed. So people don't have any other choice rather than going to the doctor and GP. They're trying to go and get the medicine and information from the telemedical sectors. There's lots of new platform come out. Teledoc is one of the major one, but I'm not talking about Teledoc today. I'm talking about some undervalued stock, which one have a huge potential, which is HIMS and Health. They don't only sell the prescription drugs and stuff, they also sell lots of like over-the-counter cosmetics and lots of other things as well. It's too many things they do. So I'm thinking it is a very, very good deal. It is very, very good company that they're improving very, very well. There is lots of price changes happen. Lots of analysts increase their price point. There's really, really lots of interesting going on about this stock. So if you're interested and if you like to know about different sectors, new stocks, maybe you can, which one nobody covering, nobody saying about these things, so new ideas, I think you are in the right place. If you like to know about more, let's go dive in to this stock. So at the beginning, I'm gonna talk about the companies, what do, how they do, and let's go in. So that's the HIMS and Health. We can see on the display as I always go to a small description about the company. They're on the telehealth industry. They connect the consumer with the licensed healthcare professionals, the doctors. So it's like online based system. And okay, I don't want to read all those lines. So you can like buy a subscription, and after you can, if you need any help about mental health and any kind of health issues and things, then you can go to the platform, ask the doctor for the prescriptions and suggestions what you need. They also not only in prescription drug, they also in like protein, biotin, collagen proteins, melatonin, sexual health diseases. They also in lots of product like including vitamin C and moisturizing creams, fragrances, face wash, anti-wrinkles creams, skincare products as well, and lots of shampoos and lots of things actually. So it is really interesting. The company actually based on America, head office in San Francisco, California. So let's go what's going on in the company price point. Okay, so I go to the price point at the moment. I can see it's just simple Google price chart. I'm checking here. In the last 1 year after the IPO, the price was $10. Now at the moment we are bottom below than $10 range. So we are at the bottom because before there was a huge price movement. Why it has happened actually because of the pandemic, everything was closed, so people actually had no other options. So this kind of industry like telemedicine industry had a huge pump, so lots of people go and use those companies. So the price gone high, people thought okay, gonna do better, but now the pandemic is gone. Now they think they're not gonna go do it that much better. Now actually the truth is the things are changing now. There's a new trend now. The telemedicine actually, it should be like there what we are today, it should be maybe 20 years later, but because of the pandemic that pushed us to go more rely on telemedicine. So the growth of the telemedicine sector is huge now, and the improvement is already done because of the reason is we need that time. That particular industry, they did very well. So lots of people now, even though the things are getting better, everything opening up, but lots of people still feel confident and comfortable not going for the appointment and stuff and waiting in a queue. They can go and subscribe the platform, and in their inconvenient time they can ask for the physicians or this help they needed. They can one-to-one discuss online and find a solution for them. I think, and they feel more comfortable as well because they're doing it from their home. So, and if it is like elderly people, there's another thing as well, and they are not like tech savvy, where we all know this one, but lots of government and other people are helping them out because of this one. So even though they're staying in the home, they can do interact with the people, they can Zoom call, and they can get their treatment from this kind of platform. So at the moment, the HIMS and how the price go down really huge. You can see was from the all-time high. It was not too long before, it's only February 2021. The price at the that moment actually like $23 USD. So at the moment it's $8. So if I check that how much it's gone down 66%. So there's the margin of safety for me. 66% is a very good amount. Okay, if you compare what the other company doing about like HIMS and HARS, like if I compare with this one with TeleDoc is one of the leading one. Okay, is a big difference between TeleDoc and HIMS and HARS. TeleDoc is like a kind of established stable company than the HIMS and HARS, and it's more small HIMS and HARS. TeleDoc is quite big company. So if you check not only HIMS and HARS, all these kind of TeleDoc industries, the telemedicine industries, been hit hard. So if you check actually last 1 year what the TeleDoc did, you see it was like a $10 price range 2016, but after the pandemic hit, you saw it was $61-ish price range. Then after it gone up huge, the stock price gone up like 379%. The all-time high, the price was $293. So if you check, okay, from $293 when it was high, so how much it gone down? It gone down 48%. The similar trend we can see on HIMS and HARS as well. So it's not only TeleDoc because of market change, market sentiment change, so people thinking that this stock not going to do very good, but in the long run the trend is going this one. So you don't want to go and buy a stock when it's gone up already. You need to understand the trend. You need to understand what's going on in the future. You have to predict it, and if you can invest earlier like an early bird, so you can do a very good gain in the future. This stock I'm investing in, for disclaimer, yeah, I'm not a financial advisor. It's completely my opinion. I can see a potentially good improvement going on in the sector, and we are moving towards that one. Like we're moving from Ice Age car to like electric EVs now. Similar like from go to the doctor, GPs and hospital, the trend is moving towards this technological telemedicine sector. So today we are here, but I can see 3 years, 4 years, 5 years later, this stock gonna do very good. And that's the way the whole health sector is moving towards that. So I think this is a huge potential in HIMS and HARS because they're taking out a good market share from TeleDoc and some other company. And not only that, actually it's been backed by one of the big good funds. They not only fund HIMS and HARS, they also fund lots of other telemedicine sectors. I'm going to share some of the news as well today. So at the moment, if I go to the chart, let's see what's going on. HIMS and HARS at the moment trading at 84% below our estimate fair value price by the simple Wall Street. And the revenue forecast is 21.46% per year. Revenue growth per year actually 80%. So you see a huge growth happen last year, okay, because people are using that one, and they have a subscription plan. They're earning a lot of money as well. Currently unprofitable because this is similar like again a growth industry. So they putting lots of money and effort to grow their market, to grow their business, and the stock price is volatile because of market sentiment movement. So the price is really down at the moment. If I go to the valuation, because it is a growth stock and it is a newcomer in the market, so you can see the growth is what it is at the moment. It is undervalued at the moment. It's an $8 stock, and it's showing like it can be, if you go into the fair value, it should be 51. If you just do the math here, I think it's going to be 6 times more. If I invest on this company now, it will be 6 times more when the market will appreciate its normal fair value like $51. Okay, so I will make money 5 times. So if I put £100, so 5 times will be like £500 when it will be only catch under fair value, not the on top, or if you've done better. So in future growth, as we said before, is really huge. It's 55% at the moment, and earning growth forecast for the future, we're predicting that it's gonna do better, but it's showing at the moment the chart in like 2023-ish, how much it's gonna be 2022, 2023. So it hopefully gonna do very good as it's forecasting. But I prefer always to look the past performance, because the past performance make a big difference to understand how is it going. Though it's showing past performance is 10.3%, because after the pandemic, actually, when everything opening up, the price and the performance gone down. Okay, the profit margin go down. But if you check actually from 2019, the trend was really good and to upward. So at the moment, if I see what's the management doing, how is the ownership doing, and what's going on with the other things, let's see. So if you check the ownership, what's going on in the ownership, there's no more like sale or buy that much in like this month, this short time of period. But we can see the holdings actually, lots of like VC and PE firms, like they're holding 29%, institution holding 28%, general public holding 24%, individual insider holding 17%, which is really huge. So lots of insider holding the stock, and a big number make us a very good confident about the stock. The stock only recently listed like not too long before, 12 months before on the public market, so we don't have that much information to understand and valuation the stock properly. So with all these things, actually I want to share a few more things. Is like I forgot to check you the financial things, actually show you the financial, how is it doing, is the financial condition is good or no. So if you check this company, they don't have any debt. So this company HIMS actually debt free, no debt even last 5 years. So they are in a very good condition, cash, stable cash runway. They have a sufficient cash runway to maintain their business for next 3 years based on their current cash flow. There's not enough information about their cash runway, though, like, because it's very new, so they don't have that much historical data, so forecasting what will be for the future. So that's the situation now. We get back to the ownership and trading, what's going on inside tradings. Yeah, so actually ROE, if you check the ROE, actually is return on equity is not that much good, is -8%, is negative. Future expecting prediction is going to be similar, but maybe they're going to do better as well. It completely depends upon how the management execute the whole process and how they're reinvesting their money in their business. And also the return on asset is not very good, which one is showing, but we are not relying on completely on this valuation at the moment, because the reason is it is a new company, and because of this one we can't value these things completely at the moment, and we need to see few more months, few more earning, but how is it going. So for you guys kind of information, actually their return, the earning report coming very soon on August 11, Wednesday. So we're expecting not too much good things at the moment, because the trend is a bit downtrend, but this is the time. So I would say, if you didn't open any position at the moment, I would say wait a bit till Wednesday, August 11. I feel like that they're gonna be expectation missed. So I think their earning will not be gonna be on that level what the analyst expecting. So there will be a dip in the stock price. I only open a small position at the moment for a disclaimer. I want to be transparent, so I have some stock, but not too much as like other small cap company. I invest only a few £100, not too much. So if the stock price gone more down, I will feel more confident and buying more stock for the long run. So at the moment, lots of people holding this stock. Actually, they are not selling that much, and so if you check the co-founder CEO holding like 10.25%, which is really interesting. And go to the chart back again. Yeah, his name is Andy Didham, Chief CEO, and you can see he increased his position 28th July 2021, which is not long before. Yeah, and the price point he got in If you want, I can check that one as well. 28th July. Let's go to the price point. 28th July, February, April, May, June, July, $9-ish. So he bought the stock actually expensive than us. So he bought it at a more higher price than us. So if we buy the stock now, and even after the earnings report, if the stock price gone down, so I think we can make a bit more better profit. We have more marginal safety than him, than CEO. So if CEO buying that price, I think he's confident to buy that price. I think I feel confident as well seeing him. And you can see that he increases position not only 1, 2, 3%, 27%, which is a huge buy. So if you check what the other people or top holder, what the top shareholder doing, so they increase their position as well. As only one at Thrive Capital, he reduced his exposure from his portfolio, but other is like most of them are holding, and some of them increased, and only few of them you can see 2 positions is here, Thrive Capital, and another one is Automake Management. They reduced their position, but the rest of them you can see that they're holding, and other are increasing. Vanguard, they're holding. Vanguard I always look because they are one of the big investor hedge fund, same as like BlackRock. They're holding this one. They didn't reduce their positions. And so far everything what I can see here is a bit risky stock because the trend is a bit downtrend now at the moment, because of everyone thinking that because of the pandemic is nearly gone now, so people are going to the hospitals and going to the GP, so maybe it's not going to be that much. But in my point of view, the baby boomer generations is going out from the end of the situation. Like baby boomers, they're aged now at the moment, they're on the retirement age. So what they're going to do, like they're going to do retirement, we need more facilities to facilitate them. So this telemedicine sector gonna do better, and plus actually the new generation also more convenient to use telemedicine sector than the old people. So all together is like a win-win situation. We have a huge baby boomer generation which is going to retire. They need more facilities to facilitate, and plus the young generation, they prefer to move on to the more digital platform about these things. So it is like a win-win. So though the trend and the things are people thinking that it's gonna go down, but prediction, I think 3 to 5 years this trend gonna go higher and people gonna move more that way. So at the moment, if I check the analyst estimate, what the analysts are doing. Oh, one more thing I must see, like you can see the Teledoc, the price actually 150 at the moment, and HIMS and HARS at the moment is only $8 range. So if they do better in the future, they're gonna go up and catch up the price. Even if they come back to like 50, then you make your money in a good, your money will be good appreciated. So if you go to the more results and information, actually you can check the similar lots of news from the Google. And if you just Google it, you can find lots of information here. Few of the information is here, like okay, in the revenue increase in expecting next 12 months, they're gonna be like 84.50%. Lots of analysts estimate those things. So you can find lots of information like this in the online. You can check if you're interested. Another thing I also mentioned before, the investment fund who actually backed telehealth medicine, HIMS and HARS, they also invested in lots of other companies as well. Some of them is like from Sydney headquarter telehealth platform, Ecliptus, and also not only that, they also founded lots of other companies as well who actually focusing on telemedicine telehealth sector. So if you check actually lots of other information, like after the pandemic, lots of people's psychology, what they're thinking about the telemedicine, are they really going back to normal life or no? There's lots of surveys in there. So there's lots of different things and thoughts coming up. So you can check that one as well. So, and plus if you go, there is more information in different platforms, you can get into it. So I'm not going that one. I'm just going to straight to the, what is the analyst estimates, and going on this one. So the analyst estimate is here. So if you check, actually, I'll make it bigger for you guys so you can see better. So lots of analysts actually checking this stock actually. One saying strong buy, two say buy, three say hold, four saying is underperform, and five saying sell. There's like mixed thinking and thoughts going on between the analysts. So we can see what's going on in the future. And if you check the current price at the moment at 8.23, but analysts average price tag actually $13, which is a bit good upside. And if you check what's the condition, the changes between the analysts, lots of analysts change their price point. Credit Suisse, they increase their, they say, okay, neutral to outperform. And Citigroup, they upgrade position, neutral to buy. So lots of positive change we can see in the market about this telehealth sector to HIMS and HARS. So I don't want to make it more longer video. So at the moment, I just keep it very simple as much as possible. I try to share the things and thoughts what I'm thinking about this one. So back to the airline now. So am I expecting like it can do better in the long-term future? But every single video I mentioned, I'm not a financial advisor. I don't have any financial degree. Everything I'm sharing here is completely my opinion. Is like a completely entertainment purpose. I'm making it. I'm sharing my journey to you. If you feel confident and do your own due diligence before you invest, and if you like my video that I'm sharing new thoughts and ideas in different industries, what I'm thinking and covering, because I don't want to buy similar kind of stock, so my portfolio will be all in the same industry. I want to buy different stock from different industries, so I will balance my portfolio as well. And I want to buy some stocks which is not nobody talking about, which can perform well in the future. I'm a long-term investor thinking to buy and holding the stock for long term. So I'm not going to buy all in one go, like big chunk of money. I'm a small investor, work like 9 to 5, like a normal average Joe, trying to do something and buying small positions every week, every month, as much as possible. So if you like my video, you're still watching the video here, I will say, please like the video, do subscribe, leave a comment, and if you're watching my video, I really appreciate that. Make a big difference for me. Thank you very much. I wrap up the video here. See you in another video. Bye today. Thank you.